Hello, everyone, and welcome to the corporate case study session. Is it all about cutting costs? I'm Dino Nicolaides, and I'm the head of Treasury Advisory for the UK and Ireland of Redbridge Debt and Treasury Advisory. I am also an elected council member and deputy president of the ACT. I will be moderating today's session. Cost cutting. Cost cutting is a topic that is always very high on corporate agendas. At the beginning of the COVID crisis, we have seen a lot of corporates being very much focused in securing liquidity, which is the lifeblood of their organization. But once that has been addressed, then cost cutting again came under the spotlight. Bank and merchant card fees can play a significant part in the cost cutting exercise of a corporate. But is it really all about cutting costs? Or are there any other factors that people need to consider? Today, I have with me two very good speakers, and I would like to invite each of them to introduce themselves, starting from Sasha Kenny, Group Treasury Director of Smiths Group PLC.
Thank you, Dino. I joined Smiths a couple of years ago, and as part of my remit, obviously, I look at the whole sort of treasury spectrum. Part of that being sort of the capital structure and the strategic side, but also then looking at the whole sort of cost centers and the P&Ls that I'm responsible for. And I think coming in afresh gives you an opportunity to sort of delve into those, and including looking at sort of bank fees and costs and sort of understanding why we're paying them, and can processes or procedures be done differently.
Thank you, Sasha. Our second speaker is Hilary Oonge, who is the Group Treasury Manager of M-Kopa Solar, based out of Kenya.
Thank you so much, Dino, and really appreciate the opportunity of hosting us today and getting to moderate this session. Over the last 11 years, 7 of which have been on the core treasury function, part of my responsibilities have been really to look through the cost centers that are attached to me, one of them being the bank charges. I've been fortunate enough to have experienced that journey through a couple of industries, starting with financial services in oil and gas, and now currently on a renewable company that has operations across East Africa, Nigeria, UK, and partly in China. So I come through into this conversation from a background of multiple experiences in different countries, and hopefully that interact through and have this discussion, we will find our experiences useful and beneficial to our audience today.
Great, thank you both. And I guess without any delay, I suggest we go straight into the Smiths Group case study that will be presented by Sasha.
Thank you, Dino. First of all, let me give you a bit of background on Smiths, because many people might not have heard of Smiths. We're a FTSE 100 diversified global engineering business. We've actually been around for 170 years, and we were started off by a jewellery shop called Smiths Jewellers in London. And actually, one of the unknown facts about Smiths is Edmund Hillary, when he climbed Everest, he actually wore a Smiths watch. But Smiths has changed in many ways since those days, and now consists of 5 decentralized divisions. And I think decentralized is very important to recognize that. We therefore need to, anything Treasury wants to do, we need to get the buy-in of our businesses. And these divisions are very separate and unique in what they do. For example, one of them makes mechanical devices, including ventilators, which obviously had a lot more prevalence and high profile and was part of the ventilator challenge in a recent pandemic. We also make mechanical seals in the oil and gas industry, and when most airports that you go through, the detection equipment, you'll probably see Smiths detection written on those. So yes, it's a diverse range of businesses. We're very much a global operation, operating in about 50 plus countries, and you'll see from the geographic footprint, very much spread across the world, but about 50% of the business is in the US, 23,000 people. Maybe typical for a treasury function. We're a relatively small team and centralized. So I have the team of 5 of us in London and 1 person in China. And then when we were looking at this project, we also needed to take into account that back in March 19, we announced our intention to demerge our medical division, which is roughly 25% of group revenue, and therefore we needed to bear in mind that that was going to be a separate legal entity at some point in time. So that's a little bit about Smiths. Moving on to the case study in the project. As mentioned in the introduction, I looked at sort of all aspects of the Treasury function, and one of those was sort of analysing the cost centres that I was responsible for. And one of these sort of had bank charges and merchant card fees, and the total came to sort of £5 million. And I have to say, initially, what stood out was actually that sounds like quite a big number, but I had no idea as whether that was we were paying too much, too little, or well, probably not too little, but was it competitive or not? So therefore, I asked my team, who've been around sort of Smiths a little bit longer than myself, and have we ever done any sort of RFPs for our sort of cash management business? And nobody could remember any, and we probably thought it's probably been at least sort of 10 years since, say, for example, our US cash management had been RFP'd, which is quite a long time. When I looked at the total fee charge of £5 million, I then looked at, okay, well, how can we sort of break this down a little bit, with 50% of our business in the US and all our merchant card services in the US. That was obviously the obvious place to start, and therefore we thought we'd just sort of target that area. Before we started on the project, the issues we have were, first of all, we had limited visibility. We probably, like a lot of people, you can see the visibility of what your total bank charges are, maybe by what legal entity, but no granularity beyond that. It's just one number. We're a small based team, so limited resources, and we're all in London without knowledge of the US market. And obviously, as mentioned previously, we have a decentralized operating model, and therefore we need to make sure we get the buy-in of our businesses, but also there's quite a lot of workload to be done and heavy lifting, coordinating amongst all those businesses. And finally, when we're thinking about the actual products, bank fees and merchant card services, what knowledge do we actually have of those? So I suppose personally, I thought bank charges, there's probably 20, 30 line items in the US. Probably how wrong could I be? I think there's well over 200 line items in the US. And then when we look at merchant card services, again, it's probably an area that Treasury, well, our Treasury anyway, hadn't really been involved in the past. It turns out that sort of it's very fragmented. There's a lot of jargon. My view beforehand was actually most of the charges interchange fees, and they're fixed, so there's probably not much savings you could make. But actually, whilst interchange fees are fixed, there's different levels of compliance, level 1, 2, and 3, and so actually, if you can get more compliance, you can get a lower level of fees. So having thought that actually there's probably an opportunity there to look at our US sort of cash management and merchant card fees, it was where do we go? First of all, just to do a high level benchmark, and we engaged a third party consultancy who maybe had specialist knowledge of both of these areas to actually look at this project for us. I didn't want to go down a path, spend lots of time and effort, and realize actually there's very little to be had, if anything. So they did a review of both of these from a high level. We provided them with some high level data on our bank fees and merchant card services, and they identified savings of 30% plus. I have to say this was a lot higher than I was expected, and I took it with a little bit of a pinch of salt. I suppose part of me was thinking, well, probably the third party consultancy would say that because they wanted to do the project. And I was thinking, well, actually, if we get up to, say, 20% savings, actually that's still a significant number and makes the project worthwhile. So we then engaged the consultancy. We wanted them to do, I suppose, the heavy lifting because they have more resources than us, but also they have the expertise. So it was a case of sort of collecting the data, analysing it. They conducted interviews with each of our businesses to understand what their needs were and their expectations. If we can just move on to the next slide. We then launched 2 RFPs for both the cash management and merchant card services pieces. and including sort of 2 rounds of negotiations. I think it was important. We wanted to bring in a number of providers to bring in some competitive tension, but at the same time, we needed to take into account the needs of our relationship banks, and we also had some. Sort of the project probably took about 5 months in total, and we had some in-person meetings in the second round. I would say total time-wise, the project probably lasted overall probably about 9 months. I don't think that we, from our side of things, needed to put in too much work. That the work was definitely done by the third party. And the overall outcome was that we managed to reduce our US cash management fees by 40%, which I have to say was a big and pleasant surprise for me. And those fees have been implemented and relatively quick to implement too. We managed to simplify our US cash management structure, and now we've moved to one bank servicing our medical division, which, as I mentioned, is going to be demerged, and another for the Smiths Group. So I think structurally we've improved things as well for the longer term of the group. And then on the other side of things, on the merchant card services side of things, there's probably up to a 30% reduction in fees on that side as well. And at the moment, we're in the process of implementing that. I think also one of the benefits of going through the process was initially it was all about saving costs. How can we reduce fees? Is there a big opportunity there? But going through, we actually questioned, okay, the processes and of why we're doing things the way we're doing. Where's the market going? Can we do things? Can we be more digital? And I think it's given us a better sort of, I suppose, structure and timeline sort of going forwards to actually how we've got a better vision of where we can go with the business, how we can do things better. I think it brought up identified a lot of costs that we were incurring in our business that we didn't need to be incurring, but we were doing things because we've always done things that way for the last 10 years, but a lot of technology and cash management processes have moved on. So there's a lot of ways to be a lot more efficient, which will be benefits to Smiths going forward. So that was basically the project. Thank you.
Great. Sasha, very interesting presentation, and sounds like great that it exceeded your expectations. And I'm sure that treasurers are always good at numbers, and I'm sure a lot of people who might be listening to you might be thinking 30 to 40% times 5 million. What does that make us annually going forward, and how much that amount was? So very, very interesting. Before I go to Hilary to ask for his initial reactions and thoughts, I just wanted to ask you, what were the key challenges that you were faced with on this project, and how did you overcome those challenges?
Yeah, so I'd say the biggest challenge was probably the internal buy-in. And it's not at a high level. Everybody from the group CFO, the divisional CFOs, and they fully bought into the project. And then they could see the benefits. It was actually maybe the implementation where say, for example, our cash management bank didn't change. Then we were just implementing new fees. That's very straightforward. Everybody's very happy. I think where we've actually changed providers, partly because you want to get the economies of scale from moving to one provider, say on merchant card services or maybe some of the cash management, there tends to be a bit more then of a bottleneck. And as a mixture of, as all these things, IT, they all require IT resource. IT are doing a lot of projects, especially in the current pandemic. IT are stretched more than ever, everybody working remotely. So getting IT resource to actually enable these projects to go ahead because they need to connect to ERP systems. There's that. And also people who are managing the projects from our business's point of view, they tend to be the people who are managing other projects as well. And so there's a bit of a resource constraint. And so it's not maybe the project not going ahead, but it's more a case of things getting delayed a bit. And I think the final point is probably just in the current environment, there's a lot of restructuring going on in many businesses, a lot of costs being taken out, a lot of projects going on, and it's prioritizing those projects. And maybe sometimes these costs can, from a divisional perspective, they can be sort of below the line, not included within their budget, and therefore maybe they're less priority. Yes, it's worthwhile doing, but they want to try and save costs out within their budget and impacting their bonus. So that needs to be taken into account as well.
Very interesting. Thank you. Hilary, I just now want to turn to you. I know that you have experience in this field, as you mentioned at the very beginning when you introduced yourself. What are your initial thoughts and reactions on the topic and the project that was run at Smith Group?
Thank you, Dino. I think the very first thing that you'll pick up front is the very fact that if you don't know what you're looking for, then certainly you will not get it. A number of times, and I'll take this out of an experience of many corporates that I know about, a number of times people overlook the banking costs. And they don't overlook them because it's intentional, but it's because they really don't know that it's a cost that can actually be managed, simply because they are not, to a larger extent, from a background of a treasury perspective, where they actually can be able to discuss these things from a professional view. And the appreciation of, especially in our part of the world, the appreciation of corporate treasurers, which has started to simmer through quite a bit slowly, it's what is now making people start to realize that to a larger and to a larger extent, there is a lot of savings that can actually be able to be done on from a banking cost perspective. Yeah, so the first thing that you'll pick out of Sasha's presentation is the fact that him getting to know what he was looking for, and then going a step ahead in getting a consultant to give a professional view of what he was looking for. That to me is a significant place to start from, and something that you'll actually want to encourage someone who wants to get into such a project. If they are not expertise in that kind of a field, then they should be able to sort of engage someone to be able to do that. If I run through my experience, Dino, when we were challenged to review our position, one of the very first things we actually did was look through the P&L going back a number of years. Unfortunately, we did not have a budget to bring in a professional to look through the entire complexity of the things that we were looking at. But it was a low-hanging fruit for us. And in such a way, the results were easier to achieve. Looking now, looking back at it, you can actually be able to see you could have been able to even do much more if you had, a technical, well-versed consultant perspective to actually have an external inside view of the complexity of the subject.
I see. Very interesting, actually. And sorry, go ahead. Yeah.
Yeah, over to you.
No, sorry. Right, and basically what you just touched upon actually very swiftly gets me into my next question to both of you, as to whether you think that the topic of bank and merchant card fee optimization is a topic that is usually overlooked by treasurers, and if so, why? I think you already sort of given us some pointers there, Hilary. Is there anything more you would like to add to this question?
Certainly, Dino, and to be very frank and honest, you will always see these aspects from when the budgeting cycle begins. You see an organization that is always on a zero-based budgeting process. When they get to the budgeting to the bank charges line, what they do is, instead of looking through the potential of that line going forward, what they do is copy paste from the previous year and they move on. And you wouldn't blame them, because to a large extent, people will say, look at the bigger picture. Yeah, but I think, as I've always maintained, in my view, when your key line is cost of capital, and at the same time the cost of banking, optimize. The very fact that you look at that line, with some keenness, sort of will give you a comfort that you are, carrying forward a comfortable number or not. So for me, the very first thing that really makes that number be overlooked, to a large extent, is the very fact that sometimes it could look like it's a small number, but you will agree with me that the small numbers are what amount to a bigger number, with time. The other thing that is very important to reflect on is the very fact that, This year, 5 years, this year, the number you have, 5 years from now, the same number will have amounted to something bigger. The problem is we start reacting to that number 5 years when the fire has been burning 5 years ago. Yeah. So the lagged effect of something that you could have managed when it started, building up, makes it more costly in the long term, as unless you actually took time to reflect on it, on an ongoing basis, on an ongoing cycle. And to a larger extent, banks will always take advantage until you ask them otherwise. That's from my experience. And if you really don't know that they're taking advantage of you, you certainly will not be able to, to pick through what they're essentially doing. So for me, really, the very fact that I feel that number is overlooked to a large extent is lack of exposure. Number two is purely lack of interest in bringing that, in considering that number as a potential opportunity for cost saving. And then number three is, to a larger extent, the socializing around the subject in itself. In a way that you can actually be able to tackle it from a professional perspective and not just let it on the whims of a normal budgeting cycle.
I see. Sasha, what is your view?
Yeah, I would agree with sort of what Hilary was saying, about the numbers initially sort of being small, but they add up, and any savings you can make now, they're not just one-off savings, they're annual savings. So it's important to sort of get them early, and you get the benefits. I do think people overlook them because of they're very small in nature. But they do add up when the volumes increase. I also think with merchant card services fees, actually a lot of people don't understand them. They are quite specialist, and therefore, if you don't understand the fees, it's very difficult to try and make savings or challenge them, etc., because you don't really know what they're made of. And also, then I think it should also point out that people's budgets. Some people have bank charges above the line, some include them with interest. If bank charges are below the line, then there's probably less incentive for people to actually challenge them. Also, if you have a large interest charge, say, for example, at Smiths, we have our annual interest is, say, £50 million, then people might say, well, actually, you should be looking at the big part of that rather than the 5 million of that is bank charges. What about the other 45 million? But a lot of your interest is fixed or due to your sort of interest rate hedging policy or the debt you have. So there's probably less you can do at the edges on the big part of it. So I think there's probably a number of reasons why it doesn't get looked at.
Yeah, and I guess it also goes back to what you were saying about different continents and the fact, for example, that in the US there were so many different lines that it was very difficult for somebody to rationalize, and definitely something which we're probably not that much used to here in mainland Europe, basically, or in the UK.
Yes, and a lot of Treasury functions are very small, and if they started delving into it, they'd think, well, actually, maybe it's too big a project for us, and So it's a challenge when you have limited resources and everybody's pretty stretched on the day-to-day operational side of things.
Mm-hmm. Hilary, you were about to say something?
Yeah, it's actually interesting that Sasha has actually brought the whole aspect of the incentive to actually look at that number. And maybe before I mention that, to be very honest, the cost of banking and usually the banking, transactions behave more or less the same way tax behaves. You, number one, do not have a working capital advantage. You are never going to have a payment terms on bank charges and bank fees. Most of the times, the bank takes care of it before you have your hands on it. Yeah. So I think there is a lot more you lose than just the number in itself. But on the actual incentive number of it, I've always looked at bank charges not only from the actual quantum of it, but to a larger extent from the true cost of that cost. And the true cost of that cost on literal interpretation is how much of my revenue or how much of profit am I losing by that actual cost in itself. Very straightforward, looking at it, how many sales do I need to make to arrive at a profit number, and then multiply that profit number by the cost of the bank charges itself. And you actually realize that it then becomes a bigger number when presenting to management to actually make a decision around it, or even making a conversation around the people that are actually influential in discussing that cost of banking itself. So for me, I've never really presented it. I think from the point of learning, I try not to present it from a quantum value of it, but I try to present it from the actual number, what you say is the true cost of that banking charge vis-a-vis how it relates to the revenue number in itself. And that gives a lot of, motivation and impetus for people to look at that number more keenly.
Mm-hmm. Very good. Yeah. Well, sorry, Sasha, anything else to add to this question?
No, nothing else.
Yeah. I just now want to move slightly towards the more qualitative side of things. We've discussed costs, and definitely bank fees and merchant card fees can be a low-hanging fruit for some organizations that can sometimes be overlooked, as we have just discussed. But I was actually thinking, how do these projects, in your view, impact bank relationships? Could they improve the bank relationship? Could it worsen the bank relationship? And by saying bank, I don't just mean banks, I also mean acquirers, because we're talking here about bank fees and merchant cards as well. Sasha, do you want to start?
Yes, I think when we embarked on this project, I was very conscious about our sort of banking relationships and the ancillary business that our current banks have, and what impact it might have if changing providers, etc. So it's something we definitely took into account. But I actually think going through the process was actually developed and strengthened those relationships with all the banks sort of involved. Banks want to move to be more digital, and they don't want us sort of stuck in old processes. And actually, if we want to be forward thinking, looking at opportunities for the group, actually, how can we do things better? Then they want to sort of help us and move that journey with us. So I think there was a lot of opportunities that came out for both the banks and us by looking at these processes.
So it did help in your case, you think, in terms of reinforcing your bank relationships?
Yeah, absolutely.
Hilary, what are your thoughts?
In my view, you will have a two-sided view of it. And in through my experience, to a larger extent, especially from one of the relationships that we really had to transform around, was the very fact that initially you had many bank accounts in many banks. And by default, the cake was big enough to be shared by these many banks. But in my, as we keep saying, bank charges are a low-hanging fruit. It becomes sensible to make quick savings when you actually are able to do what Sasha did indicate is economies of scale. So you have to pull transactions together to possibly one or two banks, and out of the volumes that they're able to give you an advantage of reduced fees and charges on it. So what that ultimately meant, and what we have always tried to do, at least on an annual basis, is to do what we say is a bank procurement process. And what we do on a bank procurement process, out of the 5 pillars that we essentially try to check, bank charges is one of them. And we give an opportunity to all our key banks to actually be able to give us a quotation of the services they are going to offer us in the next 1-2 years or within the financial year. What then that means is that we are able to pick 2 of the banks that we are going to prioritize to work with. So what you will end up doing is you will be able to build up a relationship with the 2 banks, but risk a warm relationship with the 3 banks that do not end up being competitive. So as much as it's my responsibility to warm up to that relationship and try to explain to them why we are not working with them for that particular year and why they were left out because of, very good reasons, at the end of the day, relationships are human beings. And out of that human element, you'll actually notice that they are never going to be happy. Yeah. So you will have a quick win where you're going to build a cemented relationship with your key banks. And one way, once you start an entrenched relationship with one bank, chances are you will continue working with them for a long period. And the ones that were left behind keep dropping off. until you actually get to a position where on one way or another, you feather off some relationships as you make better others. So it's one side, it's two-sided view of it, Dino, and I really hope that at the end of the day, all banks get to a level where they understand that they will win some and lose some.
So in essence, it sounds like this could be an opportunity of reinforcing your relationships with some of the banks that you want to build a much more longer-term relationship, but at the same time provide the relevant signal to other banks that perhaps they can realize that if they want to win more business, then obviously they might need to sort of twist in terms of their services or in terms of their costs and so forth. And hence, it sounds like it's an opportunity to communicate the corporate thought process and let the banks adapt to what the corporate really needs. Do you think that's a sort of fair reflection of what you said, Hilary?
Absolutely spot on, Dino, and I'll confirm it in this way, in brief as well, that a couple of years back, say 5 years ago, banks never used to do surveys, independent surveys, as aggressive as they are doing them nowadays. And I tend to think that because we consistently, some of us kept giving feedback to the banks and areas that we think they have struggled with, which have made other banks do better than them, then they have now gone out of the way trying to be proactive in seeking feedback and they make internal decisions so that they can be able to remain competitive.
Mm-hmm. Very good. Well, as you can imagine, quite a lot of treasurers are listening to us now, and I'm sure some of them might be thinking that this might be a topic that they might want to look into, or even they might have been looking into this topic and they might be thinking of embarking on a project of this type. What advice would you give to these treasurers? Hilary, do you want to give us your thoughts?
Yeah, very, very good question, by the way. And for those that are listening to us, I think, in my view, number one is part of the shortcomings we have highlighted from the beginning of the session is the very fact that not many people understand the gravity of this kind of a project. So appreciating that project in itself, I think it's one step in the very right direction. Yeah. The second thing which I also need to highlight is the essential is the primary and what you say is the primary pillar of the conversation, which is to get buy-in from all the stakeholders. If this conversation does not get support from the seniors in finance and seniors in the business, then chances are that you may not be able to get the kind of support you actually require. And I'll say this because, for instance, if you're looking at an acquirer's perspective or all telcos' perspective, transactions that are much more commercial oriented than they are finance oriented, you actually require people from commercial to be able to support you to understand that part of that cost not necessarily requires to be below the line, but it should be above the line, and it has actually a direct implication on what it essentially means from a P&L perspective. You will struggle to get to make progress on that. So what you'll encourage is get to a level where you are able to get strong buy-in from your commercial and key stakeholders in the business. The other one thing that I actually need to also highlight that has worked for me quite strongly is to ensure that at the end of the day, it is not a personalized project, it's a project that is owned by the entire finance community. And by this, I mean that you will require the analyst to do proper analysis. You require to actually see where are the areas and fields that require to be tackled, and in such a way you can actually be able to invest the entire department and avoid getting in a consultant. But I also caution at this point that if you feel you do not have the capability and the skill and the understanding of your architecture of banking cost, then it's really prudent for you to bring in an expert. In that case, a consultant who really has a 360 view of your business to be able to help you navigate that particular topic.
Mm-hmm.
Yeah.
I think the only thing I'd like to add to Hilary's is, I think from the outset you also need to think strategically about what is the aim of the project. So, is it to try and get the lowest cost whoever the provider is, or are you looking to stay with the same providers but just get lower cost, so there's no change to the business, but you get lower cost but maybe not the lowest cost? Or actually, are you looking to change your structure, maybe to consolidate globally with one provider, for example, or are you looking to some regional providers, or where are you looking for it to go sort of longer term, so that therefore actually you can manage it in that direction, which doesn't necessarily mean it's always the cheapest cost, but it's the long-term benefit for the group.
Very good. Sasha, when you were presenting, you said that the US was the obvious place to start. Does that mean there is a further journey to this? And what would the next project at Smith Group be, if you can share this with us?
Yeah, I mean, the US was definitely the obvious place to start from both of those perspectives. And then if we just look at bank fees and we start looking at the other regions, then obviously the numbers get a fair bit smaller. And I'm also conscious that we've done some RFPs more recently, so the pricing is probably more up to date. I think the next project for us is actually probably more going to be on sort of bank and guarantee fees. We issue quite a lot of bonds and guarantees because of the nature of our business. In many jurisdictions, well, we have banks who can provide in many jurisdictions, but quite often we use the same bank, and the pricing has been in place for a long period of time. Is that the most competitive pricing? I think we should have a number of our banks that we can look to use in each jurisdiction, and some of it is service as well. It's not just about pricing and bonds and guarantees issuance, but I also think on pricing there is money to be made or saved by providing some competitive tension and other providers. So I think for us that's probably the next. Well, it's also the next biggest number to look at in the budget wise as well. So that's probably the next focus.
Good. Well, good luck with this. Right. In the interest of time, we have about 3 minutes left. So I was just wondering if each of you, for a minute or so, if you can give some concluding remarks that you want to leave the audience with. Hilary, do you want to start?
Yeah. Maybe before I give my final remark, I just want to highlight that in this part of the world, mainly Africa, right now, there is a lot of SaaS mobile banking and mobile transacting much more than it is in the cards and merchant transactions as it is in the developed world. And what has actually realized is the telcos are now taking in the space of the banks quite aggressively, where the primary transactions between the consumer and usually the corporates has become a telco, and really just having banks as intermediaries. And as this is seriously entrenching in our environment, Dino, it's just good to highlight that the dynamics of how you're handling telcos from a banking perspective require not to be different on how we have always been handling, established banks in one way or another. But I think the difference is the nature of the transactions you're doing. I'll give a very good example of where I currently work, is where each and every transaction that comes through is of a very little amount. But they are in small transactions, say less than 50 cents on the dollar. But the frequency of those transactions in a day is quite a huge element of traffic. If we were going to be able to be charged per transaction, you will actually be able to see how much money we could be losing on bank fees. So one of the things we have essentially had to do is agree on a revenue share number. And a revenue share number is, for instance, where you're actually going to say that out of the amount of money we collect on this particular month, we are going to give you this particular percentage. And that has worked for us very well. And want to imagine that if that really should be the direction in which way, as a treasurer and as a corporate, you actually do not really lose substantially if you end up having many transactions of the little small amounts. What then you appreciate at the end of the day is you can actually then be able to easily pass on that percentage cost to the customer if you so require, and be able to get you can manage your P&L cost quite effectively from that perspective. So something to really think about, because the cards are becoming thinner and thinner in our parts of the world. But what is peaking through quite a significant pace is the use of mobile banking, and how we actually manage that cost can be either complex or simple depending on the approach you essentially give it. To my final remark, I think in my view, as treasurers and as corporate treasurers for that aspect, we are really being challenged at this point in time to not only sit back and count the liquidity, but also to contribute significantly in managing the cost of the cost of transacting and the costs of the organization. If all of us in the business played a role in the numbers that we are responsible about, and really being able to look for opportunities of reducing those costs, then at the end of the day, you will actually realize that we are leaving our organizations at a better place. My challenge, as always said, is, as I possibly will say, is that let us not look ourselves as cost centers only. We can be a cost center, but also be able to save some costs to compensate for some of the costs that we are actually spending. A good way to look at it is, if I can be able to save 40% of my banking costs, that 40% can be able to pay salaries for a number of my team members, which is a direct savings and a permanent saving that I'll actually be able to make within my function. So let us continue playing a central role in improving the P&L of our organizations, not only from a cost of capital only, but also on other areas that are surrounding, that are really within our realm and our area of responsibility, not only in the short, but something that is actually sustainable in the long term, from a treasury perspective.
Great. Thank you very much, Hilary. Sasha,
Thank you.
Any final thoughts, remarks?
Yeah, all I'd say is that for treasurers who haven't actually looked at their bank charges and merchant card fees, I think they very much should do. I think they could be very pleasantly surprised at the amounts that could be saved, and also it's relatively easy as well. So it's relatively easy savings, and those are annual savings that they will generate. So it's definitely a sort of quick win and low hanging fruit, as you put it.
Great. Well, a very big thank you to both our speakers today for this interesting and involved conversation. Just one or two things that resonated with me that were sort of discussed. One thing was that Sasha said you have to think strategically. And on a similar line, Hilary said, if you don't know what you're looking for, you can't find it. And perhaps bank relationships could be reinforced and improved with such a project, but at the same time get the right internal buy-in. These are basically some messages that at least I took away from this conversation. We hope that you enjoyed this session. If you have any questions, please feel free to reach out to any of our speakers or myself. You can do that through the platform of the conference that will remain open for as long as this session is on the platform. And I really do hope that you enjoy the rest of the conference. Thank you very much. Bye now.
Thank you. Bye.
Thank you. Bye-bye.
Bye-bye.